Hey guys, welcome back to my channel. So today I want to talk about a strategy that I've used throughout the years in my trading. Um, it's on the ES. So this is futures ES. This is on the 1 minute chart. It's basically a strategy where you trade the the candle. So your risk parameter is the candle itself, and basically the candle tells you whether or not you will stay in the trade. So obviously you need to, because this is futures. This strategy is great for using with futures because of the lower spreads. When I was trading with Forex, one of the problems that I had was the fact that the spreads can be so massive at times. So it makes it extremely difficult you know, to really trade this strategy. But with futures, it's much better because there's not much spreads. Um, so what is the strategy exactly? So it's basically trading with the candle. What you really want to do is I would suggest trading the strategy, say, at least for me personally, what I used to do is I used to wait, say, 10 to 20 minutes after market open, because then you get these bigger price movements, in the candles. It's not like the aftermarket sessions or the after hour sessions where the candles are just barely moving one or two ticks, which isn't really great for the strategy. But when the candles are a lot bigger, let's go to market open, go closer to market open. So that's the 230 area. So I would say 10 to 20 minutes past, market open. And the way that I would trade the strategy is, let's say I see a let's say I see a red candle. So the market's dropping. What I would normally do is I would take my sell within the candle. So, the candle can be moving, up and down. I take my sell within the candle. My rule is basically, if the market goes against me and the candle starts turning green, usually what I'll do is I'll close that trade completely. If the candle stays red, I'll stay in that trade. Now there are some rules to this. Normally when I don't take this type of strategy, it's usually in if I think the market's consolidating, I'll just stop trading altogether. Or if I see a lot of wicks going on in the market, I won't trade this strategy either. So you really want to see a nice solid movement. You want to see minimal pullbacks in the candle, and you want to see a nice green or red candle going. And that's where you will take your trade. So, this red candle could be, let's say it opens there and it pulls back a little, then it starts dropping. So what I'll do is I'll take my sell. If this red candle starts pushing all the way back up, I'll just close the trade. But if it continues to stay red, I'll stay in that trade. I won't trade when the market's too volatile either, because in cases like that, because you're just setting a fast stop loss, it can get really really painful, especially if you're not careful with your sizes. You have to be very careful with this. It's not as much important with this strategy for risk reward. I know risk reward is something that's important, but when you're scalping like this, risk reward is important, but it's not always important to get like 3 to 1 um or a 4 to 1 or something like that. You can even have a negative risk reward, a, a 1 in your favor to a 2 loss, and you can still make money. It's just you just have to have a higher win rate. Um, so with this strategy, it's important that when you're trading it, the types of candles that you're trading, the bullish or bearish candles that you're looking for, and you're not just taking trades on a whim. Because if you do that, you'll end up with a you end up with a higher loss rate, which is not what we want at all. So yeah, so this strategy is just waiting, looking for clean setups, looking for clean price movements. Take the sell. Honestly, what you can also do, which is something I've done before, is if the market's super nice, it's super neat, it's super quiet, and it's just moving in your favor, you can pretty much just drag your stop loss. Get your stops and just drag them with your trade. So if you put your entry there, say on this, your entry there, on that candle, and let's say you had a stop loss, say there. Let's say you're looking for, you're just looking for a couple of ticks. So you're looking for the price to move, say, you know 1 to 2 points in your favor. You can set your take profit there. Obviously, if the market's clean, it's not wicking about, it's not, being super volatile. What you can do is to just drag your stop loss down and just, keep trailing that trade, which is a good thing. You could get a runner in that case. Um, but yeah, so that's a strategy I've used throughout my trading. It's not exactly for, I wouldn't recommend this strategy for, newbies and beginners. Um, Obviously always trade with the trend, and that's something I try to do all the time. Sometimes the market conditions just don't allow that. You could be trying to trade this strategy, but if the market isn't trending in any particular way, if it's just chopping about, that could be quite difficult, because what's going to happen is, you're gonna set a sell. Let's say you set a sell here, and what's going to happen is the market's just going to reverse and take you out, and that's because it's not necessarily trending in any way. Yeah, or sometimes, the wicks are just too much, like I said. So that's something to think about. But yeah, anyways, that's it for this strategy, guys. Thank you guys so much for watching. Subscribe if you guys want to see more videos like this. Please let me know, and I'll see you guys next time. Bye bye.